Okay. So good morning. Welcome to Trading with Goals. I'm sorry. My trading view always has issues. When I draw lines, they just keep appearing. And I open Webull and I touch something and just made the chart all messed up. So thank you, T, for sharing your chart. So we have CPI today. Who knows what's going to happen? Who's bullish? Who's bearish? What do you think about inflation? I'm kind of bearish. We'll see. Anyway, so I'm gonna talk about, I've showed you guys you're bearish. Okay. I've showed you guys how to use the previous open and the previous close level. I don't know if anyone knows how important the previous close is to trading, especially day trading. Anyone knows why the previous close level is important?
I think if it opens above the previous close, it kind of gives us an idea the stock is going to be bullish. But if it opens below, it could be bearish.
Yes, so it gives like a kind of support and resistance level, because the whole day we have a stock going up and then it creates a high and then it creates a low and then the close. So the close is usually important because it tells you what was the sentiment for that stock. So if a stock went to a high level but it closed below the high, it means they didn't want the price of the stock to go up. That's why the close was below the high. And if the close is above the low, the stock price wanted to go up. So I've taught you guys about, there are several strategies, and maybe one day I'll include this topic in the special Sunday class I talked about. There are several strategies that are surrounded around the closing price. Okay, so today I'm going to teach you guys a very important one, very easy to take notice of, just because you can tell. I've heard you guys talk about 180. The stock market has done a 180. So now we are using the 180-degree strategy on the closing price. Okay. So this is what we call the 180 degrees. So it means we have to compare. How do you know there's a 180-degree turn on the closing price? You have to compare 2 days. So you have to compare, excuse me. You have to compare the previous day and today. So what happened yesterday and what happened today in terms of the closing price. And we're going to look at it in terms of a bullish 180 or a bearish 180. Okay, so meaning a bullish 180 is when a stock, the previous day, the close was at the bottom, that stock trended down. And then today, the close is at the top. So this stock did a 180-degree turn on the closing price. And we'll see how, I want to go way back so that we see how that price, before I look at the current one, like for cut, this is a current one. So the closing price for not yesterday, the 9th. So you have to be comparing to a previous day and a current day for you to get a 180. Okay. So on Friday, we had cut going down and the closing price was down here. And then what happened to cut yesterday? The closing price was up here. So when you compare, so this is a red candle opens, the open, the low, and the close. This is where the close. I'm using the 15 minutes because that's the time frame where you can clearly see the close, the previous close. And like when you're using a higher time frame, you might not see it clearly. Okay, so this is a current one. I don't want to use this current one now. I want to go way back when CAT did another 180 turn, so that we see how those closing price affected how you are going to day trade, how we were going to day trade later. And I'm going to go back to January 29th. Okay, so the close gives you, it's a key level for a stock, because it can give you a point of support or resistance. So if a stock is above the close, we've seen it using the 30 levels. If it is above the close, it's bullish. If it is below the close, it's bearish. So that was one strategy, using the 30 levels. Then we had the doji. The doji, you're using the open and the close. The stock market is not decided because the opening price and the close price are the same. So whoever wins the day, the following day, if it's above it, the stock is going up. If it's below it, the stock is going down. So that's where we have those doji, those indecision candles, the spinning top, the shooting star. Most of those are based on the open and the close. So this is the third strategy I'm teaching you guys. Maybe one day in that class, I'll put all of them together so that you know how to use the closing price with different strategies. So I'm going to go way back to the 29th. Where is the 29th? Okay. So this is the 26th. This is the 29th. So on the 26th, you have to be comparing 2 days for you to have a 180 degree. How do you know this stock has done a 180 degree turn? You have to compare 2 days. So the previous day cut, this was so this, you have to look at the last candle. This is post year. So you have to look at the candle up to the close. What time does you? So this is which candle is your close? It has to be this one. This is the closing one, right? Because this one is falling after a market close. So you draw your line. You have to draw the line to see what I'm gonna to see how this strategy works. Okay, so you take your horizontal line. Okay, so this is the close. So a candle, a red candle open. This is the open. This is the low, then this is the close, where it comes to close. So the bottom is not the close, that's the low. This is the close, where that candle closed. Okay, so that's on the 26th. Now look on the 29th, what happened. It did a 180 degree. So we came from down here, we went all the way up here. The close, so this is a green candle, this is the open, this is the high, this is the close. So that was the close for this. The next day, you want to see a clear 180 turn. Now, that's your close. So you have to take note also of the previous day low. Okay, so this is a 180 degree turn. It means the previous close was at the bottom. And then the next day, the previous close is at the top. So on the previous day, you want to create like a demand zone, and then you want to create like a supply zone here. So you have to take note of the low of the day. So the close and the low, it has to be at the bottom. So your low, you can draw a red, you can change this color to red. Okay, and you guys will see why I want to change it to red. Bear with me, I'm not so good at, ugh. You will have to do this because when you're using that indicator, I've tried to see an indicator. Some of those indicators, I don't even know if they're accurate when they're giving you the close. Ah, okay, there you go. Shoot. Really? Okay. So change this color. There's this thing. You change it to red and you'll see why. Is that red? Okay. And then when it does a 180, the close is at the top. So you pick on there, you draw a line at the high. Okay, so when it's closing at the top, it has done a 180 degree. So here we are at the bottom and here we are at the top. So we have to draw a green line and you guys will see why. So we take this same horizontal and pick the high. So it doesn't have to be the same candle. It can be a different candle and then change this color to green. I hope that's green. Okay. So now so these are 2 days. You had a 180 degree turn. This stock closed at the bottom. Then the next day you are at the top. Most of the time, if you want to get this thing, catch them clearly, you will see a stock trending down. And then the next day that stock is trending up. It has done a 180. The close has to be at the top and the close the previous day has to be at the bottom for a bullish 180 turn. Okay, so how do these levels help you? You can even fill this with a green or fill this with red so that we know for this is 26th and 29th. So from 30th, how are these levels going to guide you? When you're going now to the next day or even the next weeks until this stock gives you another 180 turn, above this, you're trading calls. Below this, you're trading puts. If this stock is not staying above this, now this becomes your demand zone. This becomes your supply zone. If it is not staying above this, you're trading puts back to this region. If it's rejecting going lower, you're trading calls back to this region. So is that clear? Between getting now the 180 turn, you have to be referring to 2 days, 26, 29. Okay, before I scroll, I want you guys to get the concept. You're comparing 2 days. You have to have a 180 degree. The previous day close is at the bottom. The next day close is at the top. That's a bullish 180 degree. Okay, so from there, you want to see how is this going to help me to trade this stock. Above it, you're trading calls. And of course, now you're using levels to exit. So you're not saying Virginia said it's above it, you're just you're now swinging or holding or wherever. You have to have your exit level. Okay. So if it's not going to your target levels, you get out with your calls. You wait again if it comes to this region for you to get in to get calls again. If it's not going above the next day and it's below this region, then the goal is to go back to this. This becomes your supply zone and this becomes your demand. Okay, when this is not going above, you're changing this from demand to supply, and then you're dropping again, you're coming down here. You are interchanging, but you want for continuation, you want the price to be above this region. Okay, so we're seeing this next day, we didn't have much. It didn't go up. It came down. It didn't go to this level. It went up. So we had like a zigzag day. Okay, so you continue again to see. This year was 31st. So this was the 30th. This was 31st. And then this was February 1st. So what happened? It went above, came down, didn't go down here, but now it's going up. So you're getting calls. And of course, you're using levels. So this region is guiding you. Above it now is when it's above is acting as demand. You're riding it up. You're riding it up and now you're using levels. When this stock is done going up, and it's coming down. It will come down to this same region. So you're still going up until maybe you get another day, you get a 180 degree. If not, you're using the same guide. So the same guide, if it's not coming down, you're going up. When it's done and that stock is pulling back, you'll be coming down to this same level. Okay, so you want that 180 degree turn. It's giving you continuation. Okay, if you're not getting another day of a 180 degree turn, this same stock will come back to this level. But CAT gave us another 180 on Friday, and yesterday, what happened? The close was down here. This is there. So this is the open, this is the high, this is the close. So you draw your line again there. Okay, then the next day you're comparing 2 days, it has done a 180. Your close is up here. We take another line. So if CAT opens above this level, so our close, this is the close, 321.63 yesterday. If it opens above it, you're trading calls, and of course you're using levels. If it is not going, you're trading this gap from 321 to 316 and still leave these other prices because they're still relevant. If CAT is going down, it will go all the way again to 303 until it gives you another 180 degree. Okay, so this is one example of how you want to know how the closing price comparing 2 days when it has done a 180, how to get continuation, a bullish. So this is a bullish 180 degree, and we'll look at a bearish 180 degree. So I wanted to go way back so that you see how that price affects your entry. It gives you entry for continuation when after a stock has done a 180 degree. So the previous close was down there on the 26th. Then on the 29th, the close was up there. Okay, so I've scrolled, I've zoomed so that you see how those levels are affecting you, the trading. So we came from here, this was the close, this was the close. We did a 180 degree turn. So this whole region was guiding you. Above it, this stock is going, so you're using levels for exit. So this is what we saw from this day when it went above, you're holding your calls, and of course you're using levels for exit. So it went all the way up here until it reported earnings, okay? And then afterwards, we didn't get any other day until Friday, where we had CAT dropping the whole day, and then it went up the whole day. So now we want to see CAT for continuation above this level, the 321.63, to go up, or below. If it's not going up, you're trading this region from 321 to 316. Then below it, you still come back to this. These same lines you drew are still important. You will be holding puts from 316 all the way to 303. Then below it, you're holding puts to your target levels until you get another 180 degree. Okay, so that's CAT first example. Anyone lost before I do the second example? Anyone with a question or lost? It's very easy. You have to see the 180 turn. Okay, so the same 29th and 26th for into. Okay. So here, you have to see a 180 turn. The close is down here, and then the close the next day is up here. So you're drawing your line when it did the 180. Just leave them there. Those levels will still be important. You've seen how long it took before we got another close 180 degree. Until you get another 180, just leave those lines. You people don't see my chart is always having lines, the ones I drew from I don't know how many years ago. And they still, those levels become important when the stock goes back to those levels. So we have into, on this day, it was down here, and then the close did a 180 degrees, went up here. So you're drawing your line. This is on Friday. So this is the candle, the close there. And then this next day, the close is up here. Okay, so you have also to draw. I don't want to take time to change the colors. Changing the color is just to guide you, but you can leave the same. You have to put a line on there because it's giving you like a demand zone and a supply zone. So you have to put a line on that previous day when it did a 180. My goodness, now to turn on notification. You put the low. Oh my God. See, you're the one who's usually good in this. Ugh, stay there. Ah. Okay, and you have to put another line at the high. So it gives you like a demand zone and then a supply zone and a demand zone. You have to also take note of the high and the low of those 2 days. Just leave it there. So this is into 26. We had the close down here. 27th, sorry, 29th, we had the close up here. So you have to take note, you have to create your own, you're creating your demand zone and your supply zone. So the rest of the days, if this stock is not going up, like into didn't go up the following day, what happened? You're trading puts between this region to this region. If it breaks below, you're holding now to your target levels. Like this is what happened to into, it went down. Now, when it's going back up, it is going back to this same level. So this one, when it stopped going down, you're trading it back to this same region. If it is breaking above it, you're holding to here. If it is not going above it, then trading puts to your target now, target levels of 80 or ATR. Okay. Now, when it's going back again, if it's this one, this day we created a low, we created a lower high, we broke it. So you're trading it back to this same level. So from here, this is 623, you're trading your calls back to 639. If it's not breaking above it, then again, you're coming down. And then it didn't go lower, it created a higher low, it went back up, slightly broke it, still came down. So this is giving you a guide for your day trades. Okay, so we came down again until this day we went inside, we pulled back here, and then your trading calls to here, shallow pullback, and then now we got our continuation above that line. Now you see this is Friday, and then we came back again to this same line. So now we want to see if we are above 654, we're getting continuation. So now you have to retest this level to go higher. If it's not, you're trading puts here until you get another 180. And you're seeing we've not seen any other one. Oh, this is another 180. Oh, we got an, oh, this is not a, so this is an example. This is not a 180. Look at this. So this, the close was down here, but was the close up here? This is a question. So we had a close down here. I want people not to confuse and just be picking and creating their own 180. A 180 has to be clear. That stock is closing up. So this stock hit a high and then it closed down here. So this is not a 180. It has to be green candles go closing up here. So this is not a 180. Okay, you have to have a clear 180. So this is the close. This could have been another 180. This was the close. No, this is not a 180. You see, the high price should be almost near the close. And you're seeing here the high and the close is down here. You have to have a close and a high. When you're seeing this on this day, you're seeing on this day, our high and close is giving us a very, the region is very small. If you're seeing you're getting a very big region between the high and the close, that's not a 180 strategy. It has to be the close and the high have to be very close to each other. That's a 180. Anything that is giving you a huge gap, that's not a 180. Okay, so don't force the 180. They're very clear. Okay, so that's for into. Anyone lost? Okay, my questions. How long do you keep your lines once you have drawn them? I usually just leave the lines. These stocks will come back. These levels are, there's a reason why a stock is closing at a certain price or a stock has a certain high or a certain low. We always come back to these levels. We always come back to these levels. That's why when I draw my lines, I don't delete them. I just leave them there. Because at some point, it means this is a key level. We'll come back to this level. Any questions? When you guys are quiet is when I'm worried. T, ask a question. Kashiro, are you here?
Yes, me, I have questions. Sorry, I'm just now getting a chance to see what you're doing. I was just listening. Can you explain again what that 180 is and how do you choose those 2 days?
So I'm not the one choosing. It's the stock gives you a 180-degree turn. So it means the previous day, this stock, the close was at the bottom. And then the next day, the stock closes at the top. So you have to be comparing 2 days to get a 180-degree turn. You guys understand what is a 180? You guys did math. Kashiro. Does 180 mean you're going exactly where, I mean, you're doing a completely different turn. Okay, so let me ask you on work day. So work day, the same 26th and 29th. So Kashiro, did work day do a 180 turn? On Friday 26th and then on Monday 29th. And as we are discussing, please look on your charts and see if you can identify any 180-degree turn. The close. So the close is where the last candle, where is the close? And then the next day, the last candle. So you're going from down here, you're doing a 180, going up here. Kashiro.
So it's a 180, yes.
Okay, so it's a 180. So you're drawing your line on that previous day, the close. So this is a red candle. This was the open and this candle closed here. So you're drawing your line there. Okay. And you're also drawing the bottom. You're seeing the close is almost the same as the low. Almost the same. Most of the time, the low of that day or the close are almost the same. So you're creating a supply and you're creating a demand zone for yourself. Okay. So here, this is the candle. This was the close. And this was the high of that candle, of that day, not the candle, of that day. Okay, you're seeing it's very close to each other. So when you're seeing a big difference, then that's not a 180. The close and the high have to be very near each other. My goodness. Stay. Okay. So these 2 days will guide you how to trade for the next days. You have to identify the 180. So this is bullish. Why? Because we had a stock at the bottom, the close, and then it went up. So this is a bullish, and we look at example of a bearish 180. Okay, so you want to see from the 30th, how am I going to trade workday? So whatever stock you identify, the 180 bullish turn, it's the same stock you're looking at it. Okay, so from 30th, bam. If it is not going up, you're trading puts back to this level, it hit it. If it is not going lower, then you're anticipating this stock is going back up to this level. It went back. If it is not breaking, you're trading puts back down to this level. If it is not going up, again back down. If it breaks below, you're using now your target levels for exit. Okay, say this was your exit. You want to trade it back up to this line. Above it, you're trading again back here. That's the 7th, the same stock. Okay, you want it above this to get continuation. You want that continuation. Hii zingine ni just your scalping or making money here and there, but you want to catch the continuation. So now above this, you're not holding. And of course, you're using target levels for exit. So here, if you're seeing a stock above this, then you can swing or you can hold. If it's not hitting your target levels, you're coming back again where? The same place, break it, you're going here. Who is seeing this beautiful thing?
Miss Virginia, what is that top line? What is that top line? I understand the two bottom lines are the closes for the 2 days, but what's the top line?
I'm trying to figure out who's asking the question.
It's Juju.
Oh, where have you been?
I'm here.
So you have to, those 2 days, you're drawing, what 2 things are you taking note in those? Of course, the close and what else for those 2 days. So when a stock does a 180, the day it's at the bottom, what other level are you taking note of? Anybody can answer. The day you're taking note of the bottom, when this stock does a 180, these 2 days have to happen for you to know a 180 happened. You can't catch this before. You have these 2 days. So if you see a stock was dropping, then you see the next day, this stock is going back up and the close is up here. Just know this stock has done a 180. So you're taking, the key thing is the close. The previous day close was at the bottom. The current day, the close is at the top. You have to take note of 2 other levels. When it was at the bottom, what was the support? The low of that day. When it was at the top, what was the high? This is where I'm getting the 2 lines. So this is the close and this is the high. So I said, for you to catch a clear 180, mostly the high and the close are very near each other. You're seeing this one very near. So this is the close and this is the high. You guys understand how a candle, go to the daily chart so that you guys see. Is my computer the one is slow or is yours, T? Where are the candles? Oh, it's 2023. Oh my goodness. Okay, So I hope you guys understand the open and the close of a candle. I'll use the longest candle to explain. Okay. Make it big. So I want a candle. Okay, this one doesn't have a wick. So when a stock has a wick, which one has a wick? Okay, so this candle is a green candle. This is the open. This is the low. So a stock, this is the open, then the stock is driven down. That's why we create a wick. Then it rejects staying down there. It goes back up, goes to this high. That's a wick. The high is rejected. Then that's the close of that candle. So you have to understand, the reason we are using the 15-minute candles is because it's clear to see the 180 turn. You can't clearly see it on a daily chart. So please, 15-minute chart, okay? Now, this is a red candle. It's a bearish candle. I want to use one that has a wick. So this is the open. A stock open, this stock opened high. This is the open, it opened up here. Then this stock was the high, the wick. It went up. Okay, so if you're a person who's holding calls, instead of selling, you're saying, I'm holding. Then what happened? This stock comes back down. The high is rejected. And then it goes this down. The down is rejected. And this is the close. So please, if you don't understand how a candle opens, the closing, the open, the high, and the low, please, it's very easy. Just Google and see the structure of a candle. We have the body, we have the high, the open, the low. Please understand it because it will make this clear, Juju. Okay, so we are taking note of the close, of course. We want the 180 turn. A stock, previous day it's at the bottom, the next day is at the top. So you've gotten a 180. You have to take note of the low when it was at the bottom and the high when it was at the top. Then you're creating your supply and demand region. Does that answer your question, Juju?
Yeah, I was wondering whether it's a high for that current day or is it the high for that specific candle?
Juju, we are talking about 2 days. So when it's at the bottom, you're taking note of what?
Of the close.
Where? Ebuka hapa kwa hii class. This whole topic is about the close, okay? So when it's at the bottom, you're taking, apart from the close, what other thing are you taking note of? The day it's at the bottom. Juju, the day is at the bottom. What other level are you taking note of?
I don't know.
So this is the 26th. The close was down here. What other level are you taking note of? The low. When it's at the top, of course the close is the first thing we're looking at. But what other level are you looking at? The high.
So there's a high, low, and close. Okay.
So the 180 degree means this stock did a 180. The previous day it was at the bottom. The next day is at the top. So you want to note the close when it was at the bottom and also the low of that day. And then the next day when it does a 180, you take note of the close and the high. You want to create your demand zone and your supply zone. This whole level, you're seeing so this one didn't give us a huge difference. Okay, so we have 296, 296, but there are some stocks And we look at, thank you, Charity, ADB. We were going to look at ADB next. And thanks for taking note. I've said, please look at the charts and see if you can notice 180. Okay. So when that stock is above these two levels, this is your now supply zone. You can even feel, you can feel these two lines with the color, so that it's showing you this is your demand, or you're just leaving those lines. You're taking note of two levels, the high and the low on top of the close for those 2 days. Charity, clap for yourself. So when this stock is above this, as long as it's dancing between these two regions, you're trading the in between. If it's giving you a good gap, you're trading this as it's consolidating between these two regions. But this is a bullish continuation pattern. Okay, the 180 bullish is for continuation. You're going to continue bullish here, but it doesn't mean that's why we are taking note of the low and the close down here on those 2 days, because if this stock doesn't stay above this and crosses below this, you're getting puts and you're using your target levels. But this stock is meant to go up. It's a bullish pattern when you have a 180 bullish close. When it does a 180 degree, it's a bullish continuation pattern. So it means at some point, this stock is supposed to go above here and you'll be holding your calls. And this is what we see. So even despite it being bearish and even breaking below this level, you are still supposed to be trading calls for this stock. It's supposed to be a bullish continuation pattern. So even if it's dropping, as long as it comes back to this region, you're trading to this level. But the key is for it to be above this. The day it's above this, you're holding your calls. It's a bullish continuation pattern for a 180 bullish, 180 degree bullish turn from the close. The previous day, the close at the bottom. Today, the close is at the top. Okay, and we look at the opposite. Yeah. Okay. Now this is the reason I want to do that class, because you don't have enough time to even. Now Juju is in a daze. She's like, what is Virginia talking about? Some others who are not talking. Oh, hey. Oh. Charity, tell me which date. Charity, you're getting it, right? I hope so. Give me the date. When did it do a 180?
I was asking a question. So just to clarify, you said that the date makes a 180. It has to be either going down that day and the following day goes up. It can't be zigzagged, right?
Even if it's zigzag, it's the close. You're looking at the close, it should be at the bottom. And then the next day, the close is at the top. Even if it's zigzag, you see it is zigzag, but the close, you're looking at the closing price.
Okay, so I thought ADB was on the 9th and yesterday. Because the close that day, it was up there.
Now
and the distance between the top and the bottom on the 9th was little.
Okay, so
and yesterday
you're talking about which kind of 180? So we have a bullish 180 and then we have a bearish 180. So which one are you talking about?
Oh, bearish. Now it's going down.
So you are talking about a bearish 180. What happened? This was the close on the 9th, and this was the close. So it did a 180 on the bearish. So I told you guys we have two. We have 180 bullish and we have 180 bearish. So this is an example of 180 bearish. So you're drawing your line here. Charity, I hope you're getting it. So this is a 180 bearish. So it means the close on the 9th was up here, and then you have to draw the high, and you're seeing the high and the close, they're very close to each other. It's just me who's not drawing very, very clear. Okay, I don't want to focus because of time. And then the close for yesterday. So this, what does this mean, Charity? This is the close, okay? And the low, this same candle gave you the low. Ugh. Now, Charity, what does it mean? How are you gonna trade from today?
As long as it's below the low, it's a put. And
So
if it
puts, okay? Now, if it's pulling back, you're pulling back to what level?
to the low,
To the low. So this one. If it is not going above it, so if it goes above, your trading calls to which level?
the top.
This one. If it is continuing up, now you're holding. So this same stock, now you're looking at it like that, like that. Okay? Ah, thank you for noticing. I don't know if anyone else has noticed. Okay, so NVIDIA. So this is a recent one. Charity, tell me what happened. I want to make it simple for you. Between Thursday and Friday, what happened? Now I want to show you, even on a zigzag day, you can still get a 180. It's about the close. So what happened on Thursday?
The Thursday, the close was 697.32.
At the bottom here. Okay, so this is the close
The
here.
bottom.
Okay, so this candle, this is the candle. Yeah. Okay, you draw your line there.
Oh, and you said now Friday is 180, but it went higher than.
No, wait.
It doesn't have to be like the same price. It can go
Guys,
even higher.
okay, Charity,
Oh.
when you're talking about the open and the close, or the high and the low, it is from when the market opened to the market close. This during market hours?
Yes, no.
No, it has to be this black region from market open to market close. That's it.
So it's not like a V-shaped kind of. I was looking for a V-shaped. So the price can go way higher.
Wait. Wacha kwenda mbali. My goodness. You're looking at comparing 2 days. Even if you have a zigzag day, you're looking at the close, the last candle here, and then the next day. It came from down here and did a 180 turn and went up here. So this is your close. How are these levels going to help us for the next days to trade? So this was Thursday and this was Friday. So from Friday, how am I going to trade NVIDIA? When the market open and it's above that level, you're trading calls, and of course you're using target levels for exit. When it's done, it is coming back to this level. And do you see what happened? It came down to this level. If it is not going back up, it is going down to this level. If it breaks it, now you're using your target levels until you get another 180 degree. Charity, it has nothing to do with after hours. Sometimes you can use that to say I'm holding. The minute you're seeing a stock, the previous day, the close was at the bottom here. And this next day, this stock is going up and it's closing here. It has done a 180 degrees. You can hold, sometimes it's risky, but you can hold calls, or this is gonna guide you how to trade for the next days. Above it, calls. If it is not going up, you're trading puts back to this 720. If it is not going to this 696, it wants to go back up. If it is not going back up, you're trading puts from here, 720 to 696. Below it, using levels. Above it, it is supposed to be a bullish continuation pattern. Wait. Charity, Kashiro, and the Juju.
Now me, I have a question.
Yeah.
How can I identify that on the daily? I know you're drawing on the 15, but am I able to identify that on the daily?
I said, Kashiro, it is not
because you said it's 2 days.
It's 2 days.
Can I not do that on the daily candles of 2 days to identify? Then I go back on the 15.
Now, when you're looking at this daily candle, what do you have to do? Can you clearly see that you have to put your line here to see this was the open, this was the low. You have to do the same thing I'm doing, Kashiro. From looking at this chart, can you just clearly say these 2 days, the open and the close were like this and like that?
So is it safe to say that for it to be a 180, where the close is and the low or the high, the distance between the low and the close, or the high and the close, has to be small enough for it to be 180. If it's wide, then it negates the 180.
The 180 is only about the close. You're only adding the high and the low to create that demand and supply zone. This strategy is only about the close, only. It's not like the doji is about the open and the close. It's only about the close. I'm adding the high to give you a region. Now, if you can easily tell 180 degrees on the daily candle, go ahead. Okay? But you still have to do this thing I'm doing. You have to look at this candle and see what is the level here, what is the close. If this close is doing a 180, it has to be clear, because there's some time, Kashiro, if that close, that's why this 180 is not happening every day. Okay? So look at this day. So this day, on Friday, we have the close up here. The next day, where is the close? It's here. Did it do a 180? Kashiro, did this close do a 180? Nawapea kitu rahisi, nyi mnaleta vitu. Can you tell, did it do a 180 here? Because this is the close, and the next day the close is here. Did it do a 180?
No.
No. So when you go to this daily candle, from just looking at this, tell me the day did a 180. What is
can't tell.
You can't tell. What is the issue with the 15 minutes? You can actually tell a 180 even before it happens. A stock the previous day was trending down, down, down. It closed down there. Then the next day, this stock is trading up. It's closed up there. That's a 180. That's the stock you add to your watch list. Terry wants today's watch list. Oh my God, I haven't given, oh my goodness. Woo. Terry, you are right. Koerini. Oh, we can't even do the other. Oh.
You might have to continue this on Sunday. I definitely see that. I had questions, but I don't want to step on other people's what you call. So when Sunday comes,
Oh,
I wrote down like 4 questions. So
oh,
yes,
maybe we
I'll
should
finish
start
answering.
this
I'll
with this
express it to you.
topic. There's very good strategies to my head is too tough. They're very good strategies. The close, please go read about the close. There are very good strategies just surrounding the close, and it makes trading very easy. I have to go. I didn't even notice that. My God. Kwaherini. T, sign us off. I didn't even notice
Take
that.
this money. Let's go make this.
Yeah.
And we'll pick this up on Sunday.
Okay. Kwaherini. I didn't notice that not. Hey, Terry. Kumbe unangojanga hizo.